Hi, this is Nancy Godrad. I'm going to go over this exercise that is part of Chapter 2, Question 4 homework. If you remember in Chapter 1, we had this question, Question 5, asking us to analyze transactions A through J. And we analyzed it by showing, for example, when the owner invested $12,500 into the business. We said that the assets, cash, will increase, and then also capital will increase. So now in Chapter 2, they want us to analyze transaction K through S and show the effect of them on the T accounts. T accounts basically show the increases and decreases in each asset, liability, and owner's equity component. And because the company has been in existence in last month in Chapter 1, these transactions that happened, A through J, already affected the T accounts. So for example, you will see that the capital account will have a beginning balance of $12,500, and the remaining accounts, most of them have beginning balances. For example, cash has a beginning balance of $10,540, and now we need to analyze the other transaction that's happening in this month. So let me bring back those transactions, and they were transaction, for example, transaction K said that the company received a phone bill for the month of July. So in this case, we are assuming they haven't paid it for, but since they haven't paid it, they owe money. That's a liability increasing, and the name of that liability is accounts payable. So we're going to make a T account. Actually, the problem already shows you a T account for accounts payable, but I'm going to create it in here. And so therefore, the accounts payable will increase by $200. And we have to remember the rules of debit and credit. And debit and credit for liabilities, in order to increase them, we have to credit the liability. That's why for that transaction K, we're going to write the K in here and the $200 on the credit side. And accounts payable have an account number, which I didn't write what they are. So that's the credit side of the transaction. But because the phone bill is considered an expense, running the expenses are the cost of running the business, in this case, it will expenses increase by a debit. That's the rules of debit and credit. So therefore, we're going to debit phone expense in our T accounts. So every transaction that we're going to analyze, we're going to show the effect of it on the expanded accounting equation, and then decide how do we increase and decrease that account by referring to rules of debit and credit. So for example, transaction L, it says paid. Paid always means cash decreases. So we decrease assets, cash being an asset, by a credit. So transaction L decreases cash by $300. And then the reason we paid $300 is for the insurance policy for the month. So insurance for the month, again, cost of doing business is an expense. Therefore, we need to increase an expense, and expenses get increased by a debit. So that's how you're going to analyze each transaction. And eventually, once you analyze all the transactions and show the effect of them as a debit or credit in each T account, you're going to arrive at the ending balance of each account. So for example, if we had only two transactions in cash, you would look at the total debit. And so since I have only one number, if there were many debits, you will add all the numbers on the debit column, arrive at the total, write it on the amount below the line, the line that you put in here, and then you add all the credits, the numbers in the credit column, put it on the credit side, and decide which side is larger by how much. For example, since I have only two of this, I could say, okay, my total debits are $10,540 and my total credit is $300, and now I'm going to come up with an ending balance. So the debit side is larger by $10,240, and therefore that becomes now the balance as of the end of the current month. And next month, we will start our cash account with this balance of $10,240. Eventually, part of the problem after you analyze all the transaction, you're going to create a trial balance and show every account that has an ending balance. For example, in my example, of course, there are many other transactions that will affect cash, but if this was the only two transactions, then my ending balance for each account will show up in the trial balance for the company. This is as for the month ended, I think it's August, whatever month it is. And then eventually in your trial balance, for example, if I had only accounts payable 200 in the credit side, eventually what you do is you're going to add up all the numbers on the debit column and all the numbers on the credit column, and the total on the debit must equal the sum of all the credit amounts. Otherwise, we didn't do our journal entry, our transaction analyzing them correctly, or we missed bringing a number from the T accounts, the general ledger, to the trial balance. I hope this answers your question. If you have any other questions or you need more clarifications, I didn't go over all the transactions, but that's basically the concept of it. Let me know if this was not enough, and I'll answer your other questions via another video.